Equities are building on the rally of the last couple of days. As I speak to you right now, we've got the S&P just up over 0.75%. We've got the Russell up about 0.6%, the Dow up about 0.5%, and the Nasdaq up about 0.33%. Yields are dropping dramatically. The 2-year is down 13 basis points and below 3%. It's down 28 basis points over the last 2 days. The 5-year is down 15 basis points from yesterday, down 32 basis points over the last 2 days. The 10-year is down 14 and 31, sitting at 3.02%. So right on the verge of breaking that 3% level. And the 30-year is at 3.16 on its yield, down 9 basis points from yesterday. PMI figures in the EU, the UK, and the US were all lower than expected. UK composite was unchanged, but the rest of the data set was lower than expected. And US composite was at 51.2, so approaching that 50 expansion contraction level. So definitely soft data there. Jobless claims worse than expected again, with a downward revision on last week. So that again showing economic softness, and that is fueling the narrative that the Fed might actually be able to pull back on rate hikes sooner than expected. But inflation data not showing anything different. We're going to get a read on that tomorrow. Big banks also announced over 80 billion in buybacks, so that's holding the market up a little bit. Now we get day 2 of Jerome Powell's testimony. House of Representatives will get their opportunity to question the Fed chair. And then looking ahead, we've got a Department of Energy meeting with oil executives going on this afternoon. Tonight, we get Japanese inflation data. Tomorrow, we get UK retail sales, German IFO business climate, and then the final June Michigan sentiment index, which will have those inflation figures in there that I mentioned a little bit earlier. Also, St. Louis Fed President James Bullard speaking, San Francisco Fed President Mary Daly speaking tomorrow.